and then the negotiation piece of it, I was kind of excited. Like, yes, my offer got accepted, but at the same time, I'm like, was I the highest offer? That it was kind of like that.
Welcome to the Opposites Unite podcast,
where we discuss real estate and lifestyle topics,
break barriers,
build connections,
and find common ground.
Let's unite. So today I have the pleasure of introducing our dear friend and trusted lender, Robert Rivera from Loan Depot. Hi, Robert. How you doing?
I'm good. How are you doing?
Good. Having a good day so far?
Yeah, it's excellent. The weather's better, so enjoying it.
Enjoying the heat.
Yeah, definitely.
For sure. Well, I think I'll let you tell the story about how we met at NAREP.
Oh, yeah, definitely.
So, how do you remember it? I wonder if you remember it the same.
Yeah, it's pretty vivid. Basically with you and Eber together, we stayed at the same hotel over at a conference for NAREP Elevate. And I think we were going down the elevator, and pretty much a lot of people there had their name tag, where they're from. And my main goal was, as a lender, is to meet a bunch of realtors and ideally people in your same area, just because I don't like to commute, but I will if I have to. And definitely you guys were around my area, and we just kind of I got your information. But the thing with that, the takeaway is I actually followed up and called you guys back. I called you guys separately. I met with you separate, and we talked about what I can do. At the time I was working at Wells Fargo.
Yep.
And I met with Eber, and same thing, and a couple other people that I still have really good relationships with today.
Yeah, we all just kind of hit it off very organically, wouldn't you say?
Yeah, definitely, for sure.
Yeah.
It was something that it didn't have to be forced into it. It was kind of like initially when you meet somebody, especially in this industry, you're trying to fill them out and make sure like what's, like how you can help them out. That's what I look for, like how I can help their business grow and vice versa.
Absolutely. Yeah, we just stayed in touch. And then for those who don't know, NAREP is the National Association of Hispanic Realtors. And Eber was Eber the president at that time? He was the president
he started at the Santa Clarita chapter.
Yeah,
and he was
exactly. I think that was maybe his first year.
Yeah, and it was my first year attending one of those events, and I started becoming part of it after that.
Yeah, okay. So luckily, I mean, we hit it off so well. I actually got to be your realtor when you and your wife bought a house.
Yeah, definitely. So, just kind of a little background on myself. I've been doing loans for, about 20 years now, and it's a real 20 years. It's not like hey,
it's not a fake 20 years.
Yeah. So, and definitely 1 year feels like 20 years, in this industry. However, I met a lot of realtors, and me deciding to buy a house, I wanted to utilize somebody that was going to have my best interest, because my first experience in purchasing a home wasn't the greatest, so I ended up actually getting my real estate license myself, just because I really didn't see the.
You did? I didn't know that.
Yeah, so I got it myself,
that's awesome.
and this is back in 2008 when anybody was getting the license, and I decided to do that right after I bought my first place, just because of the experience I had. I didn't understand about contingencies and the nervousness that they felt when they were, hey, your contingencies are signed off and things like that. It was very, it was about going through that process with my first realtor was just basically, what's after this door? What's after this door? It was like, I didn't know what the process was going to be to the end. It was always like something new. It's a new experience for, I'm sure, your first time home buyers.
Yeah. So it sounds like they didn't explain things.
Right. They kind of assumed that I knew a little bit, because I was doing loans at the time, but I was doing a lot of refinances. So it was just based on customers just being in their houses versus buying it in the time frames that you had, where you had contingency periods and you had a start date and an end date on a calendar. They didn't matter about weekends or holidays and things like that.
So because you did loans, they assumed that you knew
exactly
how real estate contracts were and how the time frames worked and everything, right?
Earnest money.
Oh, wow. Okay.
The down payment for the earnest money, the cost for your inspections, the cost for your appraisal, everything. So with that experience, and then the negotiation piece of it, I was kind of excited. Like, yes, my offer got accepted, but at the same time, I'm like, was I the highest offer? That it was kind of like that. And, the price where we were offering, it was kind of like, well, what do you think? And so that's kind of what I felt. And so
it sounds like you weren't getting a lot of guidance.
There was not any guidance. It was kind of like, I did it on the whim when they would ask me to, and it felt like it would, like they should have asked me a couple days earlier, but it sounded like hey, we need something today. And I'm like, well, how long have you known about this,
Oh, okay.
And so it felt very rushed, and I ended up, closing on it. But like I said, the experience was not that pleasant. So, in going to my next purchase, I kind of have a little bit more experience in helping out my clients, and I knew exactly what I wanted. And I saw how you guys gave a breakdown of everything that you guys deal with when you go into escrow, what the time frames are going to be, what's expectations, the dates as far as closings. And so it was very thorough. And then along with the types of properties we were looking for, because obviously we had our budget, and this is during time, I think COVID, it was probably a year before COVID, we were looking.
Yeah, I was trying to think, what year did we close that?
Yeah, so it was just 2021, because I had stopped shopping for a while just because, there were some things that I wasn't quite sure about the market. So, but as soon as I saw the market was going to be well for us, I just decided to move forward. And you were very nice about it. You were just like all about me. It wasn't about like, okay, I got to get this closing. It was about more so like, I want to help you get to the next place. This is what you're looking for, and things like that. And the experience was a lot pleasant. It was really nice. And both you and Eber really helped me along the way. If you weren't able to be available, Eber would be right there filling in. So it was really nice combination between the both of you.
Oh, that's good to hear. So I'm honored to know that we gained your trust.
Definitely. And that's why I utilize you as one of my referral partners for clients that don't have a realtor or they don't like their realtor.
And we definitely appreciate that.
Yeah, definitely.
We love the reciprocation, and it's always good working with you because you know us, we know you, and we attract similar types of clients that tend to be more of our ideal client at the end of the day, which ends up being like a good match, right? I think it's like a good fit.
Definitely.
Because that's important, right?
Yeah, there's a lot of clients that they don't get along with their realtors for whatever reason that might be. Maybe it's the follow-up or whatever the reasons. And sometimes if that doesn't work out, and that does happen, even sometimes with the lenders as well. But, it's always good to have somebody that's going to be connected with them because we try to earn those clients for life.
Most definitely. Robert, can you tell me how your journey has been in lending and how you got started?
Oh, yeah. So probably around 2001 or so, I started doing collections for a company called Countrywide Home Loans. So for those of you that are in the mortgage industry, definitely that's like the basis of a lot of loan originators. And
Okay.
I started there in collections, just doing 30-60 subprime collections at the time for people that were behind on their mortgage. Got into something called a workout where we were able to negotiate for payment plans, short sales, deed and liens where you give back the keys, things like that. And I was doing that for some time. And
So you helped people a lot during a tough time for them.
yes, definitely. And it was, always constant, that type of workflow. And I just wanted to do something different on the other side of it. And a lot of my friends were getting into loan origination, and I wanted to get into that. And I luckily, through networking and meeting people, I was able to go ahead and get into a position at Full Spectrum Lending, which was a subprime lender. And I was doing that for many years. And, at the end of the day, like I said, it really helped me from doing operations about payments, cash flow, things like that, as far as where I give my advice for the customers and clients. So sometimes they're in a lot of place where they want to put down a large down payment because they think it's going to help them with their payments. But because it's spread out for so much time, I break it down with different types of options for them. So that way they can understand that sometimes it's a little bit better to keep some cash flow, and basically with the transition of the move, for upgrades within the house, because as you move, you're going to be buying all the new furniture updates. Maybe you want new carpets or paint, and you want to have some cash available so you can go ahead and do those. So being in the experience of collections, because a lot of people, they just put it all towards the property. That was the main goal. And then they come into some sort of emergency where they need those funds. I utilize that experience with those clients to kind of pass that information along. And at the end of the day, usually the customers, they just want to, I want to give them the choice so they can make their own decisions that's best for them.
Yeah, most definitely. I always tell clients when I send them over to you, you might qualify for $1 million, but you might not be comfortable with that payment. So, don't worry, Robert will scale it back to you and, reverse engineer that number so that, you're happy with the payment, because we definitely don't want you house poor at the end of the day, because then you're going to hate us.
Yeah, definitely. So, from where I started to where we are today, and as far as the guidelines, typically we want to try to use a percentage of their gross income. But, as I know, cost of food, entertainment.
It's gone up so much.
Yeah, just things that I don't see that's on the credit. They know exactly their spending habits, so they want to be the ones that are going to be deciding, yes, I'm comfortable with that payment. Even though the bank might say, hey, you can do it based on our numbers, they may not feel comfortable with that. So you want to have that conversation. At the end of the day, I always say, you're making the payment, so you want to make sure you're comfortable with this, because if something that you really, let's say, for example, expenses for kids' curricular activities after school, and just traveling. You have to go and see people, or whatever their expenditures might be. You want to be able to account that for all your budget, and that's something that we don't do when we take the application. But I do talk to them because sometimes they're really sticker shocked when, like, hey, you're qualified for this payment. They're all excited to shop for that home, and then they don't even look at the paperwork until like the final day, and they go, oh, this is what the payment's going to be. And so you want to break that down, itemize it, because we consider, the payments on the mortgage, the taxes, the insurance, which now has also increased over the last couple of years. And that's also something that can make or break deals today.
Yeah.
The homeowners insurance. And then obviously if there's homeowners association dues and any types of special assessments, we want to be able to account for all that cost.
Right, because when you're qualifying somebody, you only really are looking at the items that show up on their credit report as far as expenses when you're calculating their debt to income ratio. So, I mean, obviously, people have food and they have utilities. Those are things that don't show up on there. So there's a lot more that goes into it.
Yeah, they could be saving into some sort of like life insurance policy that we don't see that expense on their credits. So those things are sometimes, those are commitments that they have to deal with on a monthly basis. So again, they want to be their best advocate to, like, oh, I have this expense. So that way we can kind of take that into consideration, or I plan on doing this, or maybe my job might be short time because I'm only working so many months. Those are things that I want to have a conversation with. So that way when you are finally getting into that home, you're comfortable with the payment and you're not going to have any type of regret, like, oh, what did I get myself into? Because, there's problems with every types of, property that could happen, just general maintenance alone. So you want to be able to make sure that they aren't, house rich and cash poor.
Exactly. Yeah. Things break.
Yeah,
it's a
definitely.
House. They're constant
air conditioning
projects.
right now, everyone's probably making sure that it's running smoothly. And then, like utility costs, those things go up. Sometimes HOAs turn around, they go up.
I know you see it every day with insurance costs and HOA costs. We actually did a whole other podcast on that, the rising costs and how it affects DTI and everything. But I mean, as you know, it can blow somebody's DTI out of the water, and then all of a sudden you have a blown up deal you have nothing to do with.
Yeah, especially if they're on the fixed income. So the DTI, we like to use a lot of acronyms in our industry. So debt to income ratio. So basically what that means is the amount of income in comparison to the expenses that they have. But if something just all of a sudden, and people were very tight at the very beginning of their purchase, and all of a sudden something increases, which the lender doesn't look back on because, we accounted for just the current expenses, those things can affect people in a dramatic way, especially if you have fixed incomes.
Yeah, that makes a lot of sense. I know at Loan Depot you have a ton of different programs to choose from, but what are some of your top programs that you really, really like?
So right now, the greatest program not the greatest, but the one that's really popular are low down payment programs. So we even have like 3% down, and those numbers increase as far as the buying power. So 3% on the conforming loan limit for first-time home buyers. And so that's going to be around $760,000. Don't quote me on that because that's not exact, but it always increases like every year, it seems like. But that's a really good one. And then we just have a proprietary product for us, which is 100% financing, where the customer can finance the entire purchase price. They just have to come out of pocket with the closing cost. And
that's really good.
Yeah, and there's programs that they have down payment assistance programs, but there's all these little caveats to it where you have to be a certain type of minimum credit score, or you have to make a certain income, and if you make over that income, then you're not eligible for those down payment assistance programs. So we have something that can kind of go and defeat those particular types of guidelines and help them get into the house with very little out of their pocket. And then we just, right now, home equity line of credits are good for a lot of customers that are having that credit card debt that they're just trying to go ahead and consolidate, because everyone wants that's bought in 2019, 20, refinanced in 21. Even 22, they want to keep those types of interest rates and they don't want to touch them. So, but because right now we're currently at the highest expense of credit cards, 2.1 trillion throughout for a country, which is the highest it's ever been. People have a lot of debt that they need to consolidate and kind of lower that monthly disposable income that they're spending out there and save some money for savings, because savings are a lot lower than they used to be. People aren't saving as much as they used to be.
I did actually hear a statistic, and I don't know how true this is. I'm wondering if you heard it, that Santa Clarita residents are actually amongst the highest of credit card debt.
Yeah,
Is that accurate?
Yeah, that is something. So not only are we the worst drivers, we also have a lot of high credit card debt. So maybe it's also.
Wait, why are we the worst drivers?
I don't know. It just
I think
comes
I'm
up.
a pretty good driver.
I am, and I think I think everyone in this room is. I think that everyone else isn't, depending on where you're going.
Yeah, that makes sense.
Yeah. So so those are probably a couple of the good products that I think we have going on right now. And then self-employed borrowers. What ends up happening is there's a lot of self-employed customers that are into, obviously with the way paper used to be. There's we have bank statement programs to kind of help get those loans approved, and it does require a little bit more down, but it gets them into the position where they can buy a home. And so those are really good programs that we're eligible to do over here at Loan Depot.
I think it's actually easier to buy a home than people think. Would you agree?
Yeah, definitely. So if you're kind of out there and you're wondering, like,
I think some people think it's not attainable for them. I had somebody tell me that yesterday, and she said, my credit score is 863. I don't have a high enough credit score to buy a house. And I said, you do. Like, you absolutely do. Let's look at this.
Yeah, definitely. I think that anybody that is
I'm
interested.
sorry. Did I say 863?
Yeah, you said 864.
I'm sorry. I meant 683.
Okay, yeah. And that's still good. That's a still good score to go ahead and buy something.
It's fine.
Yeah,
Right? I mean, it's not in the 700s, but you can definitely still buy a house in the upper 600 range.
Oh
FICO
yeah,
score.
definitely. Yeah, as long as
Sorry,
your minimum
that was my
six.
bad. I realized.
Yeah, there's a lot of different programs for different scenarios. So definitely for every individual, you should talk to somebody. Don't just talk to your neighbor, because they might be this. Hey, I live in the same area, but they don't have the same finance situation that you might have as far as income, assets, or credit expenses. Because a lot of people just don't break it down. They just know that their neighbor got this rate. They don't break down how they got the rate. So I think if you talk to somebody just to kind of find out about your particular situation, and then I give advice. Sometimes there's situations where I can't help people at this current time, but I tell them what to do in order to get there, so that way they can get into that home. Because it's like a scavenger hunt. It's like when I think of it like when you're getting your driver's license, right? You just don't go and start driving a car. You need to prepare for it. Take a test, do your training, pass the test, and then you get your license, and then you got to pay for all the insurance and everything else that comes along with that. Same like the home. It's just you got to get the information to get there. And if you think it's not for you, for whatever reason that might happen, you want to talk to myself or any type of other lenders, Carrie as well, or any realtors that are out there to just basically find out where you stand versus just assuming where you stand. Because there's a lot of customers that I've helped that they didn't think that they can get in a home and they got into one. And those are really the good stories I like to
those are
have.
the fun ones, right? When it's a challenging situation, or they, had low hopes of getting into a home, and then, shortly, down the road, they're homeowners. So that's pretty cool.
Yeah.
I love those stories.
Yeah, those are the ones that I remember the most, is the customers that didn't think that they can get a house. And, you give them a pre-approval for a specific amount, and then they end up finding a property maybe outside of the skirts of the city. And the property is something that is going to get them and their family a fresh start in a home that's theirs. They're not going to be renters anymore. They're officially homeowners. And those customers are those ones are the memorable stories that I think about. And I call them up and I show up to their place like, oh, congratulate. I'm really excited.
They're so thankful too.
They are.
Especially like first-time buyers that never thought that they could do it. They're extremely grateful.
Yeah. And those are the customers that keep me like, let's go. Then there's always customers
Yes.
like, what I do this for. There's always people in our industry, even in our, maybe it could be the same, realtors that you deal with, or even other loan officers that like, they give yourself like, oh, this is a bad day. But it's those ones and the good people that you deal with in our industry, which there's a lot of as well, that make it like, hey, we're working as a team collectively. Let's get this done, and help out as many people as we can.
Yeah, that makes perfect sense.
Yeah.
I wanted to ask you, what's a recent win that you had in your business?
It's probably, I'll think about a recent one this year, and that's going to be with, we had I think we just closed on one, and we were dealing with this one particular listing agent that she was just a nightmare to work with, and
I remember.
And the dates that we had, it was, they were reasonable, but unfortunately the communication wasn't there, and we were able to go ahead and get loan docs out and get the file funded the day it was supposed to happen. And I went over and talked to the escrow company and explained like the whole process, and they were great. And the customers were happy that I was there, but that was like a reset win because it was really stressful. It's something that we didn't really have to go through together like that. It should have been just a really easy transaction, but sometimes there's people in that are just like the rock in our shoe that makes it a bad transaction. You're just like, oh my goodness. But
It kind of scarred our client a little bit.
yes, definitely.
Yeah.
And at the end of the day, like even though I felt pressure and
I felt pressure for sure. I mean, because I was worried, you were worried,
Yeah.
our clients were worried. But the great thing is our clients didn't blame us. They recognized that none of what was happening was our fault
Right.
or any of our doing, and that we were trying our best to navigate through a difficult personality. And, we're in escrow with them again. So, I mean,
Yeah, yeah.
it's good at the end of the day. But yes, things come up, don't they?
Yeah, so those are always good wins. There's a lot of them. I could only think about the recent ones because there's always something going on. But one of them was another win that I would tell is, like I said, I had a customer. They were shopping for a home, and I give them a pre-approval for a low amount. It was maybe like 100 or 200,000, and that's considered a low amount in Los Angeles market. And they were able to find a home, and we got them that home, and it was very minimal down, and I was able to help them out with some lender's credit, and then they were able to go ahead and get some seller's credit as well. And it made it where it was easier for them to transition from their home, and they were very thankful. And like I said, those are the ones that I think about, and I share that with my wife. I go, hey, I just helped them out, and like this is a really good
You got
story.
brownie points that
Yeah,
day, didn't you?
Yeah, definitely. And those are the types of days I look forward to any day. And even if you're like a second time home shopper, it's always a new experience I want to explain to the clients because sometimes they're new to me, but they've already bought a home. And so I like to be able to give them, expectations and deliver on those. So those are always going to be wins. And I like to tell them the whys because a lot of times clients, they want to know why they're doing all this stuff. Like, why do I have to get this paperwork? Why do I have to do this? So I give them the reasons behind it. So that way they know that it's not just me asking, that there's a reason behind it. So that usually helps them to follow through with what actions that are required.
Right, because homeowners purchase a home about every 5 to 7 years, I think is the statistic.
Right.
So Eber and I were talking the other day about, what if you did something only once every 5 to 7 years? How much are you going to really remember of that experience and, take with you, that many years down the line? So between us, we have a process that we take our buyers through, our sellers as well. But in this case with you, we deal with our buyers, and we like to take them through a buyer consultation because our industry is constantly evolving, as you know, with everything with the NAR lawsuit. These are
Right.
new waters that we're going to be navigating very shortly, come August 13th. And so, there's some new protocols we have to put in place, but we always like to take our buyers through a buyer consultation and just show them like the process so they know what to expect because it helps ease their nerves.
Yeah, definitely. And at the same time, buyers, 7 years ago, TRID wasn't around, I don't believe, or maybe
Right.
it just started. And TRID is something where we have to provide a closing disclosure for the cost because there was a lot of people that were just finding out the day of signing what their cash to close was going to be, and those numbers were not what they started with. So that's something that's new. And then just the processing as far as underwriting guidelines, those things change as well. And sometimes there's new changes that make it easier where they can validate income from just the work number nowadays versus customers having to provide a lot of documentation. But, so sometimes people might think, like, I did this before. I'm experienced. Like, I know what's going on. Like, why are you asking for this? I didn't ask for last time. Last time, this was...
It was different.
Yes, and sometimes we didn't know about it last time. So those are things that come up, but definitely things are always changing. So you just want to be very clear when things do change, and just, that's why I'm part of groups as well, just to find out about the lawsuit with the NAR and, how that's going to impact my referral partners such as yourself, because customers might think that they're smarter than the system. They might read something that's on Facebook, oh, you can negotiate. You don't need a buyer's agent now, and you can get cost of home for a lot less because you're not using that. And that's not how it's been. You definitely want some representation because, you can have the listing agent help out and do stuff like that. However, sometimes you want to have people in your corner that are going to help you to negotiate without any types of issues, So I think that's always going to be a win. And I'm hoping that we're able to go ahead and move past this, and people can see the benefit of the buyer's agent, because there's a lot of stuff that you guys do that are behind the scenes that nobody knows about. You're looking for types of properties. You're using your network resources to find out about loan products. Like, hey, I can help this person with this person, and making connections. You guys are like the connections. And then, obviously explaining all the disclosures that everyone signs. So I think that, just having that professional person right there next to you to kind of walk you through the process just gives you a little bit more ease and confidence in going into your next purchase.
Definitely. And because the listing agent, if you go direct with the listing agent, their fiduciary duty is to the seller.
Exactly.
Not to you. So you really don't have anybody having your back at that point.
Right. I always say it's kind of like if you have your two favorite football teams playing together, like who are you really going to vote for? Like who are you really going to cheer for, at that time? And so, you definitely want to go in, because sometimes people will use a realtor that they have, and you driving them around. Next thing you know, I'll get a call. Hey, we're in escrow. And I go, oh, did you let your real estate agent know? And they're like, oh, I didn't use them. I'm like, oh, what do you mean? And and I already know what they mean, but I'm just trying to get them to tell me. And they'll say, oh, the listing agent's going to help us. And then, they end up calling me up for all the questions that they would have had to call up their realtor, because they're not sure about, hey, they're telling me to do this, about the earnest money, about this, with the inspections and things like that. I'm like, yeah, that's the normal part of the process.
Well, a lot of time in that type of situation, when you don't really have somebody looking out for your best interest, they're just trying to get the house sold.
Exactly.
And, at the end of the day, they're not going to put those protections in place that if you had your own buyer, your own representation, that, they would have done for you if you had used them instead of the listing agent.
Yeah, definitely. So that's something that it's a really big disadvantage for you when you're going in there, because, like I said, your person knows, your realtor knows exactly what you're trying to accomplish, like, hey,
your goals.
Yeah. And if there is like issues that you talk to them about, maybe about noises at night that you hear because there's train stations or something that's around, that you might be aware of, that the listing agent may not explain it to you, because obviously they have other priorities in mind.
Yeah, that makes perfect sense. What is your style when it comes to working with your clients? Like, what type of an approach do you take?
My approach, a lot of my clients, sometimes they're friends. And so I take that approach with all my clients. I treat them like a friend, like I tell them the insight, like, hey, this is what you have to do to, get the best rate, and I give them different options. But I usually just I have no alternative motive. My motive is to go ahead and get them a home. As far as getting the best deal as well, definitely that's also a motive to them, because I want them to be happy with me and utilize me again. Because if you've been in this industry long enough, like, your name can be out there very quickly when you do something bad for somebody. Especially,
reputation is everything.
Yeah, so you want to try to build it up not just with your peers and people in your industry, but also your clientele, because they're going to be able to go ahead and be that extra marketing tool for you, tell their friends and family. And that's always a good compliment when customers refer their friends and family over, because if they vouched and they're able to use it. And I think that it really works good with us, because I tell clients that, when I refer you over, like, hey, this was my realtor. And I know a lot of realtors in this industry, and I say, hey, this is one I utilized. And that really,
it carries a lot of weight.
It does.
I think.
Yeah. So that's something that I'm always very conscientious of when I talk to my clients as well. So when they give referrals for lenders, I want to give them that same service to their friends or family that they refer over.
That makes perfect sense.
Yeah.
I also wanted to ask you, if you had the opportunity to create your perfect client, what would that look like?
Well, you know what? Definitely somebody that has some sort of technical app to them, because when you ask for documentations, like, hey, I need to go ahead and get a document for XYZ, and they're like, oh, I didn't get my statement, and now everything's done online, and they don't have the idea that they can pull those items offline. That is something that I wish that all the clients had, because I'll walk them through it, because I just found out a few years ago by going to, that you can go ahead and do a PDF through your notes on your smartphone app,
Oh, yeah.
So, because customers are like, I don't have a scanner, or my scanner's not working, and they want to go to like Kinko's or whatever to go, or FedEx nowadays to go and get them scanned over, or, go the old school way. And with today's technology, it's really easy. So those are the idealistic customers, the ones that I say, hey, I need XYZ, and they PDF it all over to me, and makes my job a lot easier. And it's all through like one PDF versus like one JPEG picture after another that's has like a cutoff of their shorts on there because they're doing it on their legs and things like that. So those are the type of clients to me. And the ones that don't give a type of pushback where, hey, I need this, and I explain why I need it. I'm not just, hey, give me this, and they're like, do you want my first blood too? No, I need this.
It feels that way sometimes.
It
really
does. And I explain it, and sometimes I tell customers, ideally if you have a lot of transactions going from one bank account to another, you want to try to just give something that has less, because then that can create some more questions. So, savings checking versus checking, you want to try to put the down payment and all the money coming from a savings because there's less activity in that, except the deposits going in typically. So those things are idealistic customers, the ones that are a little more tech savvy now today.
Okay, so your perfect client is somebody who's a little more tech savvy, but what if they're not? They could always bring you their documents.
Oh yeah, they can
right?
always bring, or they bring it to me. Sometimes
they can bring it to you and you'll scan it for them.
Yeah, of course. Yeah, definitely. So I like to meet them. I'll sometimes do house calls if it's, because sometimes they're not able to drive, whatever the situation might be. So, as long as they have everything for, available for me, or say, hey, I don't know where it is. Can you help me look for it? And they ask for help. Sometimes customers, I don't know what's going on. Like, you know what? There's ones where I don't even know that they're going on vacation out of the country. And those customers, you're like, oh, when did you know about this?
Isn't that the funniest? I have had that happen. I had a client that was mid escrow, and right at the time we were supposed to be closing, they were going to be overseas.
Oh yeah. Yeah,
I don't
because they think that's none of your business because, like what, you're going to get the loan done. The house is over there. Like, what do you need me for? Maybe for signatures with the notary?
Maybe.
Yeah, that might be important.
It's one little important signature.
Yeah. So, those are things that are kind of like little wrenches in my wheelhouse whenever I'm doing a loan, is like when they're going to be out of the country and I'm like the last to know about it, and it's supposed to close on a day that they're supposed to be out of the country. So those things do kind of make a little more stressful that weren't needed. Like if I knew about that up front, I would have.
You would have planned for that.
Yeah, you coordinate around that. So that way it makes their life easier, and they're not going to be all mad or upset that their either vacation gets pushed back. And this is typically if they're going out of the country, not out of the state.
Because if they're in the state, you could always send a notary to them anywhere in the U.S.
Yeah, definitely. So those are options that we have available for them.
Okay, that makes sense. I'm curious, what are some recent challenges that you've had in your business?
So recent challenges is, our business is very competitive, right? So what ends up happening is this. The credit bureaus that we use to get the information, they're all ran through TransUnion, Equifax, and Experian. So once there is a hard inquiry done with that client, meaning that, hey, check my credit, and we do a hard inquiry, even though that client might be on the do not call list, a lot of lenders that are not myself are going to go ahead and get that information. They paid these companies to get the information saying that, hey, they're possibly in the market for shopping for a home. And the customer gets so many calls calling them, and they promise them the world or a rate that they can't deliver on or something. And the customer's like, hey, did you sell my information? I just got these. And I explain it to them up front, usually prior to pulling it. So hey, you're going to get a lot of calls, possibly just.
So you prep them for it.
I prep them for it so that way there's
good.
no surprises. Because all of a sudden in the next 2 weeks, you're going to get calls from everyone saying that either some of them even say that they're my assistant or they work for the company that I work for, and that they just need to get more information to go ahead and process a file.
I have actually had that once where I guess somebody that had called had like swooped in, and the client thought that they were still working with like the original person that pulled their credit, and it was like a totally different company that had swooped in, like impersonated the original lender.
Yeah, so those are people, and if they're sometimes they're licensed and they do that in our industry, and then the fraud is up on the rise right now. So wire fraud that happens a lot. So definitely be very careful when you're doing emails and you're transferring wires, and verify like that number. Call them up, make sure it's the same number, and then be very trust but verify. You just have to go ahead and do that when you're doing transactions, because there's a lot of fraud in today's world. I get so many text messages now saying, hey, you got a delivery from USPS, here's a tracking code, and you're all like, wait a minute.
I got those. I get those too.
So when that happens, it usually means that your information's out there on the internet, and they're just trying to go ahead and bait you, because there's a lot of people that they're not familiar with today's new criminal, which is fraud, and getting your information, because our data definitely is very important to a lot of people, especially if they're going to use it for buying big ticket items and not pay. And then all of a sudden we get left with the bad credit having to fix that.
Yes, exactly. I know you can also do a soft pull too, though. Does that trigger that type of a situation where they're getting reached out to by several different lenders?
No, not at all. So the soft
Okay.
pull, it's usually going to be one credit score from one bureau, and we'll be able to go ahead and get an idea what their credit information is like. It doesn't give us the full picture, but it gives us enough where if customers are not too sure where they want to go, they just kind of want to see, because maybe they're renting for a specific dollar amount and they want to kind of see if buying a house would be similar. It really gives them a little bit more, okay, I'll do it, because like once you do that hard inquiry, it's not going to be that much where it impacts you negatively, but it's more of a commitment, because you're like, okay, it's going to affect me. So soft inquiries is something that we typically do up front. And then once they get into escrow, that's usually when we'll do the hard inquiry, just because at that time, we do need to get all three bureaus to go and run the approval on the application.
Right. And then some people are also concerned how it's going to impact their credit score. So that soft pull really makes no impact, or not much impact, right?
Yeah, there's no impact on their credit score at all.
Okay.
So that gives them a little more peace of mind to go ahead and let us look under the hood of their financial situation.
That's a good way to say it.
Yeah.
Yeah, makes sense. As far as real estate investing, I know you yourself are an investor. You have rental properties. What are your thoughts on that type of market right now?
That's definitely a great question. And that's something that anybody has the ability to go ahead and buy housing and become an investor. I was at a bank for a long time, and the customers that had the most wealth were typically the customers that had a lot of properties under their belt. And you wouldn't be able to tell that how wealthy they were until you saw their account numbers and you saw the balances that they had. And those are questions that I would ask, like, oh, what do you do? And they'd say, oh, I'm an investor. And they tell me all the property addresses. Some of them were very, they have photographic memory, and they can memorize, like, I bought the house back in 1985. This was what I paid, and they have all the information available, and they have 10 different properties that they're collecting rents on, and that's just their annuity for life, and those are things that I think are always going to be something where it's obtainable to just your anybody who has the want to go ahead and do that, having good credit, even not having good credit, as long as you save cash. There's all ways that we can work around it, but it's obtainable to really get into a house. It might not be this particular market in Los Angeles, but there's other housing markets that, a property over in one time Tennessee or Arkansas, around that area. I think it was like $30,000 for a property. That's what this customer paid for it. And the payments for 30-year fixed were less than a car payment, $300,
Yeah.
So I think that it is obtainable, and that's something that people should look at, because it's one of the only assets that you have that you can still borrow from it and not have to sell it. Like everything else, you have to sell it or trade it and get rid of it. Like if you have a car, I want to get cash, I'm going to have to get rid of the car. This is something, if you want to have cash and you need it, you can either get a loan on it, and it's tax deductible, so you don't have to claim the income on it, which is great. So there's all sorts of other benefits that are going to save you some money as well.
I always tell my clients that I look at a house like a piggy bank. I don't look at it like you spent the money. I always say look at it like it's a little bank of its own, because you can borrow from it, you can pay it back. It's an appreciating asset at the end of the day, so it's just going to grow. And there's no better way to gain wealth, in my opinion, than real estate.
Yeah, definitely. And you want to be able to use it. It's always nice to be able to access it too. If you run into something that maybe you don't want to use your liquid cash, you want to use the equity in your home. So that's always a good benefit. But just the last couple of years, there's a lot of people that have millions of dollars of equity in their home if they have multiple properties. So I think it's a really great investment that people are going to be able to have generational wealth and pass on to their kids. And definitely, it gives you a sense of home ownership. Like, hey, this is mine. Like, no one's going to be able to tell me to move, or I can't paint it this color inside, or change it the way I like it to inside. Obviously, the reason I say inside is because outside, if you have HOAs, you're going to get that letter.
You're going to get paint your house pink.
Yeah, you can't be planting that particular type of tree, whatever it might be. But other than that, I think it's a really great investment, and it's something that everyone has the ability to go ahead and obtain.
Yeah, for sure. Robert, I want to thank you so much for coming by our offices today and joining me. And I know Eber and I look forward to helping so many more families with you. So thank you again for coming by.
Yeah, definitely. Thanks for having me. It's great being with you.
Of course.
Bye.
Bye. Thanks for tuning in to the Opposites Unite podcast. If you've enjoyed today's episode, please like, share, and subscribe to our channel. Don't forget to leave a comment for a chance to get a shout out in our next video. See you next time.